Today's stock market crash is showing just how much people are not believing in the economy right now, and a couple dates coming up throughout this month will likely extend the plunge even further as there's a lack of confidence and pushing us closer and closer to a recession. And you know what happens when a recession hits? Yeah, stimulus is provided and there's increased volatility. Well, that's what we're going to be seeing a lot more of over the coming days and weeks and realistically the next couple months here. But I do want to talk about this because things are unraveling relatively quickly. And we're starting to see that right here, right now. And a couple days from now, we're also going to be getting another very, very important report coming out. And this is going to add a whole lot more volatility. I would not be shocked one bit to see another massive plunge a little bit later this week. Let's talk to the details. First up, can I ask a huge favor of you? If you have not done so yet, please make sure to like the video with the big thumbs up button down below. Thank you so much. Really appreciate that. Also, if you haven't done so, please make sure to subscribe to the channel as well with the big subscribe button down below. Thank you so much. Really, really appreciate your support. Thanks for being here and thanks for watching, and let's talk to the details. All right, so here we are. Stock market opened up today, and what did it do? Yeah, it went down pretty much all day, and it closed relatively close to the lows of the day. Now, the Dow Jones was actually the strongest of all the indices, was down only about 1.5%. Meanwhile, the S&P was down a little over 2%, and the NASDAQ was down over 3% today. Now, that's a pretty big move, right? Now, 1.5% move on the Dow, that's not that big of a deal, right? But 3% on the NASDAQ, now we're kind of talking, right? Now, here's the thing. Why is this happening? Well, first off, we always see a lot of volatility leading up to elections. Why? Well, because there's a lot of uncertainty. Nobody knows, right? Here's the thing. I don't want to turn this into a political video, but I just want to throw this out there really quickly. One candidate is very pro-business. Another candidate is very anti-business, right? Well, what is the stock market? Stock market is investing in businesses. So you see the point there, right? Again, I don't want to turn this into a political thing, but you get the point. So a lot of people are kind of reconciling positions and reallocating funds and things like this. Even though we're still a couple months out from now, there's just a lot of indecision. And realistically, with these huge funds out there managing hundreds of millions or billions of dollars, it takes a long time to move money, right? You can't just push the sell button one day and be out of a position or right into another position, right? It doesn't really work that way. It takes a long time to kind of shuffle those shares in and out. It just takes time, right? So we're going to see a lot of volatility between now and the next couple months here. But what's going on this week? And again, I want to point out a couple dates here and something that I also want to bring to your attention that a lot of people are putting way too much weight into, in my honest opinion, an announcement that's coming out this month. And again, I think a lot of people are really getting psyched out about this for the wrong reasons, okay? All right, first off, let's quickly talk about Friday. So in just a couple days here, we're getting the all-important non-farm payroll number. That is the jobs report for the month of August. It comes out the first Friday of the month, and that just so happens to be Friday, right? So that's going to be August non-farm payroll or the jobs report. This is going to be incredibly important. Now remember, the last couple of jobs reports that we've been seeing here have been coming in pretty weak, right? Pretty bad, right? They're like, oh, job market is not doing so well, right? Yeah, this last report that we got out a month ago, they were expecting a lot better, and it came in pretty weak, and then the unemployment rate also ticked up higher as well. So as of right now, we're still sitting at 4.3% as of right now. I would not be shocked one bit. In fact, I expect it to go up yet again, as this number is likely going to come in weak one more time, okay? It's not necessarily a good thing, but if you've been watching the videos here on the channel for a while now, or if this is your first time here, thanks so much for watching. Really appreciate it. But I talk about the jobs report often because, in my opinion, this is the best barometer to look at the overall health of the economy. Why? If jobs are strong, if jobs are being created, if the unemployment rate is going down, if labor participation rate is high, if average hourly earnings is ticking higher, all of these metrics, if all of these are in favor, it shows a really good broad picture of the economy. Like, hey, people are getting jobs, people are working, businesses are hiring. But when you see the opposite, unemployment going up, less jobs being created, it means what? It means that businesses are contracting. Businesses are laying people off. They're cutting payrolls because they need to free up some of their cash, right? They need to keep their powder dry for when, things start to happen, when stuff hits the fan. You know what I'm talking about, right? So anyway, they have to keep that cash flow going because when payrolls are too strong, then the deal is they don't have that extra capital to keep their business afloat. So kind of gives us a big overall picture. So that's coming out on Friday. I'll keep you posted on that. Now, next, in a couple weeks, we're going to be getting the announcement out of the Federal Reserve with their next FOMC meeting. Just run-of-the-mill FOMC meeting, right? They have it every 6 weeks. But the anticipation is, especially with the press conference with Jerome Powell out of Jackson Hole, a couple weeks ago here, week and a half or so ago now. Yeah, about that, almost 2 weeks ago now. When he had that meeting there at Jackson Hole, he indicated, hey, it's about time we should start cutting rates. And there's a lot of people that are really betting on the Federal Reserve coming in and aggressively cutting interest rates with this next meeting. Here's the thing. I had a video about the other day saying this, which is this. If the Federal Reserve comes in and aggressively cuts interest rates, what is that signaling to us? Hey guys, we blew it and the economy is weakening faster than we expected. We maybe don't have a clue what we're doing. We're going to cut interest rates aggressively because we got to get ahead of it really fast before this thing plunges, called the economy, right? So if they cut interest rates aggressively, I would not look at that as like, oh, wow, they're giving the economy a boost. No, they're scrambling to say, quick, cut rates fast, aggressively, because we blew it. We should have cut a couple months ago, and now the economy is in free fall, and we got to quick jump out there and catch the thing, right? So that's what an aggressive rate cut would do. Now, if they cut interest rates by 25 basis points, I'm going to say this much, 1/4%, who cares? Seriously, who cares? That is like nothing. That is virtually nothing. Is that really going to do anything to help stimulate the economy? Is it going to do anything to bring interest rates down for, I don't know, auto loans, home loans, lines of credit, credit cards, things like this? Minimally. It might get a little bit of attention, but that's about it. I mean, 1/4 point is practically nothing, right? So it's kind of like this razor's edge that they kind of need to walk right now, because if they cut a little bit, okay, fine, looks good on paper, but it does virtually nothing. If they cut too much, it gives us the signal that, ooh, wow, the economy's worse off than they're leading us to believe, and they're cutting aggressively because it's plunging and we got to get out there. So the whole point of it is, right, is they need to walk this fine line, because the whole purpose is to keep the economy kind of in equilibrium. When it overheats, when the economy is too strong, they raise interest rates to basically bring down inflation, to cool the economy a little bit. But when the economy is too weak, they lower interest rates very, very, very low to spur basically borrowing, spending, to stimulate the economy. And sometimes they even print up trillions or hundreds of billions of dollars and push it out in the form of stimulus just to get us to buy some stuff. That's literally the reason, right? They give money out to people, businesses, all kinds of things like that. And they say, here, please go buy some stuff, stimulate the economy, get this thing moving again, right? Big old slug just sitting there doing nothing, right? So anyway, that's kind of the point here. So this month is going to be pivotally important. What happens this month, especially out of the Fed, this is the last meeting that they have until after the election, right? The next one is actually right after the election. This is the last meeting they have before. We have 2 more jobs reports. This one coming out on Friday, and then another month from now. Actually, we have 3 more jobs reports. Now that I think of the calendar here, I believe November 1st is also, I think that's a Friday, right? So that would also be a jobs report on that day. So we have 3 more jobs reports, 2 more inflation reports, and 1 more FOMC meeting. So before the election, it's going to be very, very important. So I would anticipate we're going to see a whole lot more volatility this week, a little bit later this week. And the next couple of weeks here, we're going to have some big reports coming out, a lot more volatility, and would not be shocked if we keep pushing this thing closer and closer to a recession. And again, really quickly here, a recession is not necessarily predicated on the stock market. Not at all. It's growth, right? Negative GDP growth, 2 consecutive quarters, okay? So that would be kind of the technical definition of a recession. But here's the thing. If people are not believing in the economy, if they're liquidating positions and they're not believing in businesses and just going to cash, is that ultimately going to translate into the economy at some point? Yeah, it is, for sure, right? Overall confidence, and remember this much as well. The market leads the economy every time, right? If you ever want to know what the economy is going to do, just look at the market. Whatever the market does, the market leads the economy by a few months. Just look at the market. If the market plunges, get ready. The economy likely plunge in a couple months as well. Same thing, not that hard to figure out, right? Anyway, hope this helps you. I'll keep you posted with anything going on. Please, again, like the video. Big thumbs up. Thank you so much. Really, really appreciate it. That's very kind of you. Otherwise, subscribe down below. Totally free to do so. Big subscribe button down below. Otherwise, check out the other videos here on the channel. Thousands in the video library. Nearly 5,000 videos there. I've hand-selected some very popular videos for you down below in the description or the top of the comments section. Check those out there in a pinned comment. Otherwise, right now showing up on your screen, you'll see some videos there. Thanks so much. Really appreciate it. Enjoy your day. Take care. Have a good one, and I'll catch you again later in the next one. Stay tuned. We got a busy rest of the year between now and then.